Hello and welcome to your stocks on CNBC-TV18. I'm Ekta Batra and with me is Pavitra Parekh. Well, it's turning out to be a session which is steady as we speak. We have a lot of earnings to reckon with. Just in the past couple of minutes, we had Maruti as well as Cipla, which came out with numbers. Both of them have reported what is a strong operating beat. But besides that, we have a lot of other numbers to expect as well. For example, Dr. Reddy's, and we have Reliance post-markets as well. Hi, Pavitra.
Hi, good afternoon. It's encouraging that, we've held steady at these levels for much of the trading day. It's looking quite good. Even for the broader markets, you've seen a sharp recovery from the kinds of losses that we saw earlier in this week. So that's good to, see, of course. It is a broad-based rally and it's in line with what's going on across the global markets as well. So if you take a look at all Asian markets, they see good gains as well. So, and we're, going to take this with both hands. But let's get down to all of our queries now. We have Astha Jain from HEM Securities, as well as Ruchit Jain from 5paisa.com to answer all of your queries. Astha, Ruchit, thanks a lot for being with us today to take our viewers through all of these different queries that they've sent in. I'm going to get straight to it. Arvind writes in from Bengaluru. He says he has 112 shares of Star Health, which he bought at 990. So, pretty significant cuts that he's seeing on this one. I don't remember when Star Health was at 990. It's probably the highs of the stock. So he is making losses. What would you recommend on this one, Astha? Do you recommend booking his losses, getting out, looking at other investments, or would you, stay and keep the faith in this?
Hi, good afternoon to both of you. So I think he should hold Star Health for some time because what we can see that company is focusing on deepening its presence in the rural areas. In fact, they have increased in their agent counts also, and they are looking for enhancing their distribution channel also. So whatever the steps company is taking right now, I think that will yield in the stronger performance going ahead. But yes, for now, the investor is making huge losses. But I think here, if the time horizon is more than 6 months or so, then definitely it is a hold from my side. And the initial price target can be set at around rupees 600 to 650 to 680.
Okay, Ruchit, what would your view be?
Yeah, hi, very good afternoon to both of you. Well, overall, you have seen that the stock has been more into a consolidation phase since last few months. Ideally, the buying prices, I think, around the listing day itself, when the prices were around 900, above 900 levels. But post that, we have not seen any kind of significant buying momentum coming in. But I feel that these are not the prices where one should look to exit. In case if we get the stock again towards the higher end of the consolidation range, which is around 720 to 750 range, that could be a good range where one can think of exiting the stock. So I would say hold on at current levels. But wait for some pullback move. Don't expect any significant move in the short term because it's more into a consolidation phase, where the stock could spend a few more months.
Okay, got that. That is on Star Health. Let's also get in our next query now. We have Lakshmi who writes in from Karnataka. She holds 31 shares of Paytm, which she bought at 912. The stock is currently just above 900 rupees. She says she's a long-term investor and is looking at a time frame of between 3 to 5 years. So that is the kind of time horizon she's looking at. Astha, coming to you on Paytm, the news flow has started to switch. Brokerages have started to sort of change their call. The stock has also moved up. Do you think from a 3 to 5 year perspective, this is a good investment?
Yes, I think so. Because the results which we have seen were good. They have a focus on high margin business, and that's what we have seen also. In fact, they have shown the improvement, and they are very much cautious on their asset quality also. And in fact, they have broken one channel partner also. So all these things, along with the strong quarterly results, will really help this company or the stock to show some sort of drive in the price performance on the northwards side. So definitely a hold from my side. Initial price target can be set at around rupees 1120, 1150. But yes, here the horizon is more than 3 to 5 years. So definitely the price targets are more. But at the initial level, one can think of all these targets which I have given right now and stay invested.
Okay. Well, Ruchit, generally such a long horizon is difficult technically. But in the short term, what are you charting on Paytm?
So what we have seen that post-listing, whatever corrective phase was there, I think most of the price-based corrective phase is over for the stock. Over the last 4 to 5 months, the gradual high top, high bottom structure has been formed, and what we can see that the volumes this time has started improving along with the price up move, which is a good sign. So it's better to hold on to the stock, but keep reviewing the stock time to time. And on the high side, around 1150, I think initially can expect it in next few months. So hold on the stock for target somewhere around 1150, where position should be reviewed again.
Okay, well, that's on Paytm. Let's get to another query then. We have Deepak Joshi, who writes to us from Karnataka. He holds 100 shares of Gujarat Gas, which he's bought at around 419 odd rupees. He asks what he should do, whether he should hold on or whether he should buy more shares at these levels. Ruchit, for you, what would you recommend on Gujarat Gas?
Short-term trend for the stock is clearly negative. Even when the markets were going higher in last 6 months, this is one of the stocks which is not outperformed. In fact, even if you compare the stock within the sector, other stocks of same sector such as IGL and MGL, it is not being performing up to the mark with them also. So clearly the trend is negative. Avoid fresh buying in this. Even existing positions, I would recommend to exit on any kind of pullback moves towards your cost. Longer term charts indicate that the stock could correct further going ahead towards 360, 370 kind of range. So I would say avoid in case if you want to look for some buying or do some bottom fishing. Maybe around 360, that those could be good prices to do bottom fishing over there, but not at current levels.
Okay, not at current levels. Astha, is that a view that you concur with on this one, on Gujarat Gas?
Yes, even what we feel that either one should exit from this counter or maybe hold, but don't expect higher prices from here because there are 2-3 more reasons behind it. First of all, the way we have seen any news related to EV which have came for, from the Delhi government side has acted as a dampener for all the gas stocks, and that is what we are seeing in the prices of the Gujarat Gas also, that it has shown a negative momentum. So, and again, the sector is a regulated one, and we always know that there can be some sort of, if the government announcement is there, then definitely it can have an impact on the prices of the company. So I think the industry outlook is not very strong just because of the regulated sector which the company is operating in. In fact, if I talk about the fundamentals of the company also, it seems to be okay because they have taken some sort of a price hike in the Q2. I think in the results which we can see in the results also might be we can see some sort of positivity due to that. But overall, if the sectoral outlook is not positive, then even we are not very much positive on this counter. So either exit or hold, but try to exit from this counter at the higher prices, at the higher price level of around 465 to 470.
Okay, all right. Hold on, guys. We have a lot more queries. We need to take a break. But before that, just want to do a quick stock check with regards to two stocks. Maruti has now moved to the high point of the day, post its numbers. That stock is up around 3.7%. But giving it close company is Cipla, which is off the high point of the day, but up around 2.5% for that particular counter as well. So both the stocks are seeing some amount of gains, and that's probably going to aid the overall sentiment for the markets as well and help them sustain at the levels that we're seeing simply because of the strong numbers that we've seen from both these nifty counters. We need to take a short break, but before that, let's get you a snippet from this week's edition of Market Cafe, our newest digital offering. Surbhi has caught up with Sunil Singhania of Abacus Asset Management on the show this week, and let's listen in to what he had to say.
What happened with mutual funds back then, 2000 and 2005, that phase, I think portfolio management services, PMSs as they're called, I think some sort of a transition that's happening now, because earlier this was an investment for only the uber rich, the ultra rich.
So actually, if you see Surbhi in the US, for example, the retail money goes into the Vanguards and the BlackRocks of the world. Mm-hmm. And the smart, intelligent, large money tries to find niche portfolio managers who have owner-driven organizations. So you know that this is the guy who's going to manage your money all your life, which is unlike, say, a mutual fund where fund managers can change. And also they have limited capital, so they can do a lot of things which a mutual fund maybe might not be able to do. Having said that, mutual funds are the best ways of investing, despite we running a AI for or a
Really? You still say that?
I think so. It's very simple, particularly for people who want to do SIPs and, those kind of stuff.
I must ask you a bit about the mood that we are in today. There is a lot of talk about high interest rates in the West or what's happening now with West Asia. So there seems to be some trepidation or maybe anxiety. I don't know what's the right word for it, but something I think just making people be a little more towards the edge of their seats. But how do you feel?
The Indian economy and the Indian scenario is like on a highway driving fast. But on the Western world and the world in general, geopolitical and all, we have huge speed breakers. So I think we are right now in a phase where the Indian economy wants to just speed up.
Yeah.
But there are global speed breakers which are ensuring that, you just don't go berserk. So I think we are in a nice balance where India is outperformed because the domestic is looking very good. But yes, it's not running away because the global is challenged, both on the geopolitical side as well as on the economy side.
The last time US interest rates were as high as where they are today, what followed was a global financial crisis. Now, I'm not saying that the same will repeat. Then you have, someone like Mr. Jamie Dimon saying that this is probably the most dangerous era that we've been in the last many decades. So should we be scared?
So, we are in a world where there are so many countries and so many things impacting us. So we should be aware of everything. It's. I would say it was not wise to say that we should just ignore. We should be aware of it. At the same time, the only difference this time vis-a-vis, say, a Lehman Brothers or some other events in the past, that time these were unexpected. Now, this time it's all getting built up slowly. So it is something which is, sort of discounted to some extent. So unless it worsens significantly from here, I think more or less we are aware of this. And at least our view is that from here things can only improve, at least as far as the interest rates in the US is concerned, inflation coming off because there's a base effect, prices of commodities, agri, chemicals. So inflation also logically should come off and that should ease the interest rate scenario. But we have to track them. We just can't ignore them.
Welcome back. You're still tuned into your stocks here on CNBC-TV18. Maruti is the top gainer on the Nifty now. It's 3.7% in the green right now. The index itself is up a full 200 points, so looking very steady. Let's try to fit in a few more queries. We have Astha and Ruchit who are going to help you out with everything that you've written in to us with. The next query comes in from Sambasiva Rao. He writes in from Andhra Pradesh and has 200 shares of Arvind Limited, which he bought at 120 a piece. He says he's a long-term investor and wants to know if he should hold on for another 3 years. Arvind, by the way, is currently close to 175. Ruchit, I was just going through the charts on this one and it's had quite a ride, right? In just 6 months or so, the stock is up around 75%. You think the uptrend is intact and we could see more on this one?
Yes, I was just looking at weekly and the monthly chart. So recently we had a good breakout above that 140, 150, which was a major hurdle for the stock. And if we look at the pattern, then technically a cup and handle pattern breakout was seen a couple of months ago. And the target according to that pattern on the mid to long term charts is coming around 240. So also his buying price is quite good. So margin of safety is quite good in case if we say get some marginal declines along with the market volatility too. So my advice would be clearly to hold on to the stock and expect targets around 240. Around 240, you can review the positions whether you want to book profits over there or not.
Okay, that is on Arvind. Astha, what would you recommend on this one?
So for Arvind, even we recommend hold with the price target of 190 to 200 at the current level. So if I talk about this company, yes, we have seen a strong price momentum in last 6 months. And the reason behind that, we have seen the strong cool off in the cotton prices, cotton being the key raw material to the company. So, there we have seen because of the good cotton crops. So definitely there was a cool in the raw material prices, which is cotton for the company. Again, there is also one segment of this company that is the advanced material segment in which they provide, to the industrial workers or industrial workforce. So, in that segment also company is quite positive and they are expecting 20% growth and this segment is a margin accretive for company also. So, in fact, this is also looking very strong to us. So, Arvind Limited is looking very good and in fact, they are getting advantage of this diversification in the supply chain. So that is also helping the company. So I think all the points are indicating towards more uprise in the stock prices and that's why we recommend hold with the price target of 200.
Okay, well, it's definitely been an outperformer. Well, let's get to another query now. We have Sunil who writes to us from New Delhi. He holds 267 shares of Deepak Nitrite. which he's bought at around 2550 per share since the past 2 years. So he's sitting on a bit of a loss now on that one. He wants to know what to do, whether he should hold or whether he should probably even liquidate his holdings. Well, what would you recommend on this one, Ruchit? Technically, what does it look like to you?
The stock is more into a consolidation phase. In fact, if you look at the entire space, in last 6 months of rally, what we have seen in the markets, the sector has participated at all. So I think for some more quarters, maybe the consolidation continue. But yes, the good thing is that it is not showing any significant price-wise correction.
Okay, and Astha, what about you?
So we are not very much positive on this company. So I think if he can, if it is possible for him, then definitely some exit is recommended from our side. Because what we have seen that being into the chemical space, this company is not able to provide so much strength in their financial performance, which we have seen. Although the phenol, which is the main product for this company, is also, I mean, the prices are not going in the right direction for that thing also. And that's why we are seeing the financial performance is not that up to the mark. So purely on the basis of the financial performance, we are not very much satisfied with this company. And that's why I recommend to partial exit from this stock.
Okay, partial exit from Deepak Nitrite. With that, Astha and Ruchit, we're going to have to wind down on this show. But thank you very much for joining us, taking our viewers through all of these individual queries that have come in. Remember, if you have any queries as well, you can always write to us and we will ask our experts what they think is the best option for you. We're going to wind down on the show now. We have closing bell coming up for the last hour of trade for what has been an extremely hectic week. Stay tuned. We'll be right back.